Hi, welcome to this video day, which is on Sunday 29th of October. We'll be looking at a couple of high probability trade setups in our view. They're going to be USD CAD, AUD USD, and we're going to the charts in a moment. Now, we've done several videos on these two pairs, and what we've been trying to show is basically how to get in on a market reversal, a trend reversal, also how to get in on existing trends. And we've just been giving our exact entry levels, stops we use, and our targets, which we do daily in the member centre. If you want to see our daily technical analysis, click on the link beneath this video. Now, in terms of both trades, they've done well. USD CAD so far up well over 600 pips in profit. AUD USD nearly 300 pips in profit. But in our view, there's more profit potential in these pairs. Both pairs, in my view, are offering a good risk-reward entry for new, fresh positions. Okay, now just want to give those levels, but also what I want to talk through is a lot of people who've got these trades have asked me, I'm really tempted to bank. We're always tempted to bank. However, what we must do is obviously hold big trends. We need 300 pip profits, 500 pip profits to boost our bottom line profits. So I just want to go into a little bit about open trade management when we go through the charts as well. Now, we will be using the CAD to back up our technical analysis. Regular viewers will know it's our favourite tool in Forex trading. To learn more about it, click on the link beneath this video. Just want to launch the video through right now. Just keep in mind that what we like to do is trade with smart money commercial hedgers when their positions diverge away from large speculators. Okay, now what I'm going to do is I'm going to go to the charts. When I've finished with them, I'll come back and just sum up some key points for beginners in terms of technical analysis and how to make it effective for you. We're going to start first of all with USD CAD, and we're going to start with the COT positions first. So let's go and take a look at the net traders. Foreign currency first. This chart from COT base illustrates commercials, just for new viewers, in red, smart money hedgers, their positions against large speculators in green. Now, obviously, what we're looking for is divergence between the groups, and you can see it here. Big commercial net long position, big short position from the speculators. What do we get? Basically get 1,000 pip rally, okay? But the commercials, because they're hedgers, when prices get up here above 80, they really start to remove their hedges or put hedges to the short side, and they build up a really big short position here. It's a 5-year extreme. Speculators are 5-year extreme as well. So when we're in this peak here, you can see how the speculators step up their buying. They've already been hurt as the Canadian dollar has risen, okay, because they had a short position. They go long here, and of course it comes back in favour of the commercials. Now, what is very interesting about this chart for me is the speculators have just flatlined. They've hardly moved. The step down in their positions over the last 2 weeks is minimal, yet we've had like a 500 pip decline. So obviously this trade moment is going well. I think there's much more profit potential in it. So let's go to the daily chart and draw some levels. Weekly chart of the USD CAD before we go to the daily and draw some levels. And just want to look at the weekly chart, because I think if you're following big trends, the weekly chart really makes things clear for you. Now, in terms of what I've illustrated here is we've got this big strong move up, bit of support at the 20, then a push up. You get a buying climax, okay? It peaks, and then we retrace most of the up move, and that happens time and time again. This move up here, just speculators pushing things too far, emotion climaxes or the greed, and then we come down, okay? Over here, we come snap the 20, okay, and then we're off to the downside, a little bit of a retracement. You get a selling climax here, then the rebound takes out the 20. Now, my view is this fall down here is totally overdone on the Bank of Canada, which I've discussed before. We should go higher. You're really going to target this level here, 130. But then I think we'll retrace most of the decline and go back to 135. And the key thing is now we're above the 20. So I'm looking for more upside. Let's go and draw some levels on the chart, on the daily chart now. And I'm just going to look at some potential entries into this trend. And I also want to go through a little bit about trade management and managing a big open profit. Now, in terms of just very briefly, for new viewers, just going to go through, I've been playing this trade. See this fall down here, 6 days. We're moving 500 pips. Well, that's just too much in our view. It's just emotion. And we know specs have built up a 5-year short extreme. So we want to buy. The commercials are coming in long. We want to trade with them. We get the poke through the 121 level, get above it, come back to test 121 on that candle. This candle here is a significant one for us. Another poke through 121. Can't take that tail out. We'll come in at 121.65. And because we're COT traders, we're looking for a big move. Now, the 20-day moving average can very often provide resistance if you've got a strong downtrend. And it had been a strong downtrend. But yeah, with the COT behind us, we just think it's going to snap. It does snap. We push on up to the upside. And then we think, the 20-day will now provide support. This is going to be a strong uptrend. And what happens? We come back here to test the 20, and then this candle here, a little one, sitting on the 20 with low volatility. Now, when we did our video, when we were on this candle, we were saying, if you want to come in on this trend, it's the perfect setup for us to enter a new trend. Back to the 20, you're finding support. You're looking for an entry to get in, okay? Where would you come in? Coming through 125, I was saying 125.30. This was just before Canadian CPI. Everyone was expecting it to be bullish for the Canadian dollar. Like we said, that was in the price. People were expecting it. So is the USD going to fall? No, it's going to go up. And CPI was okay, but look at the USD. Pushes up and then pushes up again. So if you came in at 125.30 here, it will stop, back well beneath the low. You probably got about 100 pips of risk. And you move basically 400 pips the upside. I know we've retraced 100 now, but it's still 300 pips, okay? So that was good re-entry. Now, from our perspective here, okay, we're long at 121.65 and we're now above 128. So, basically what we've got is 675 pips at current levels. Now, that is a really good profit, okay? And we, from what we've just seen, okay, we think the USD is going far higher. I mean, this is a COT candle. The last one we saw, specs have not really lightened their short position much. This is only really 200 pip move on those candles. It's not enough to really hit a lot of speculative stops. Some will have been hit, but some will have been hit, but not too many. The dilemma is always you've got a great open profit. You think it's going higher, but this candle here does look like we're going to have a little bit of downside in the short term. My own view on managing open trades is, basically take some profit in, okay? And, we'll take half, okay? So we could tuck half our profit in the bank and let the other half run. We've reduced our exposure, and then we can look, hopefully, to drop our 50% bank profit in at a better price if we dip. If we go higher, we're still in. Now, that for me would be the first support level, okay? And then it's going to be the round number after that. So 127. Okay, so you got good support at 127. Now, on our second position, in the member centre, I'll put our stop at 126.70. See what happens, okay? Even if I got taken on that stop, I've still got a great profit from 121.65 on the 50% in. Got 50% banked. I can always look to come back in. I don't really care if I'm stopped out. Now, how would you play it if you want to get in fresh? My view is if she comes through to 127.50, I just look to buy back through 128. Okay, if she actually got down to 127, I would look for signs of strength and key off the level, or if we go through 127, buy back through the round number. If you play the round numbers and come in on strength, you're confirming that the retracement is over, okay? And I always like to play round numbers on re-entry if I can, through a round number. It's always a battle of noise around a round number. Lots of traders have got their orders there basically. So I'm not really expecting much for retracement here at all. And like I said, first level, sorry, I'm drawing it 132. I'm going to go 130, okay, as we saw from the weekly chart. Daily chart, we've got some resistance at 132 up here, but we know we're heading, or we think we're heading for 135. So for me, much more on the upside in this pair. And any retracement for me is a buying opportunity. Right, let's move on now to the Australian dollar, and let's do the COT data first against the USD. COT again first. In terms of the COT, just for new viewers, you can see good divergences between speculators and commercials tend to give good corrections on the chart. So this was a nice one, about 500 pips. This one here, when they step up their buying against the commercials, shallower, 200. This one here, nice one, about 400. Now here, this is the speculative chart extreme, i.e. that's obviously the longest the speculators are on this chart. It's also longest they've been in a few years. When they reach this peak here, look what happens. Get up, and then we have a nice fall. It's about, 500 pips again. I think the Aussie is going far lower. I'm just going to go to the charts now, obviously, and draw some levels, and we're going to start with the weekly chart first. Weekly chart of Australian dollar against US dollar before we go to the daily. And last week I used a monthly chart, and I was saying the importance of the 77 level. I like it if the monthly chart, the weekly chart back up my levels on the daily chart, because it makes those levels more important in my view. Now, in terms of this week, I've just drawn a little channel, 77 to 77.50. You can see here, speculators buy it up, comes down. Here they do the same, comes down. Here, this one's a shallower one, okay? Now, we do actually break through, okay? But when we break through up here, above 79, this is where the commercials really build up their shorts. So they start to go aggressively short. This high hedging volume here, okay? It gets really high up here. Then we tumble back, and we're now below 77. Now, my view is, because the speculators are so long, that little channel there is very important, because any rallies now should fade back to it. And you can see the potential downside, basically sitting around, 76, 70, 71, 70 down here. So that's 500 pips to get to the bottom of the range. The way the commercials and specs are lined up against each other, I think we'll be going down there. Rallies are going to be selling opportunities. Now let's go to the daily chart, update our position, and show some potential levels of entry stop. Australian dollar against the US dollar daily chart. I'm just very quickly going to go through how I've been playing this pair for new viewers, and also potential entries. Now, in terms of when we came up here, that's the COT extreme, and we're looking to get a position in. Now, we don't think at the time we did the video we could close above this candle tail here back in July. We get up above it, but immediately fall back, go to the 20, find some support, push off again. That candle tail can't take out that candle tail. We finish blue, okay? So we want to wait for a bit of confirmation. We want a bit of weakness. A snap of the 20 is what we want, and we get it, okay? So we snap through the 20, and we're short. Now, we know we've got the COT behind us, and we expect a decent fall. We get it. We do rally back to the 20, and it's not a brick wall, but in sort of a trend that's becoming bearish, prices should peak out into it, gets above it, comes below it, gets above it, then it comes right below it and down, okay? Now, in our last video, Obviously we were saying, yeah, if you wanted to come in fresh to this, you could come in through 77. Okay, so basically we know this is the big weekly level. Okay, so although this has been a nice downtrend, if you're coming in fresh, I thought that was the high odds level to come through. So now we've taken out 77. I do not see much upside at all. And in terms of our trade, again, what we'll do is we'll do a 50-50 when we come into 77. Okay, so take out 50%. We took it out into 77.20, I think. So yeah, we have got 220 pips on our 50% bank. We got the option of putting it back to the 20 at a better price, or if we snap through the 77 level, put it back in through 76.80. So we lose a few pips on that bank. But yeah, the purpose of the bank is to reduce exposure and get a high odds entry. And it could have been, what people might say is the worst price, but it doesn't matter to us, or it could have been on the rally. Now, in terms of what I was saying, the weekly chart, I drew that little channel. Okay, so this is the zone here, 77 to 77.50. Rallies, should fade. Okay, if we get above 77, I think we'll fade back to 77.50. I don't think we're going to close above this 20-day moving average at all. And that 20-day moving average is almost in line with the 78 round number, 77.96. Also, if you look at it, you've got 3 candle bodies you can cut there as well. Okay, so our stop is behind that level. Okay, now if you've come in on the break of 77, you risk it back to behind 78. So you want to be somewhere like 78.35 in my view. So you've probably got about 100 and let's say 50 pips of risk. But what's your potential reward? Well, we've looked at the weekly chart and we can see that the big weekly level is just below 72. So from current levels, it's what, about 470 pips, near enough 500 pips. Not too much risk in our view. COT is on the side of further weakness, and we can see if this one pans out. So in terms of getting in on a existing trend, the fact that it's moved down a bit, I don't think it's too significant. There's still plenty of profit potential to come. If you're in it, like I've said, it's always hard holding reasonable open profits in this one. This isn't as good as the USD CAD, but anything can happen. So doing that 50-50 bank, psychological, makes you feel good. Well, it makes me feel better. Reduce exposure, you're still going to come out with something, even if prices hit your stop. So I think in terms of the Aussie, we'll obviously see how she goes, but I'm optimistic that we should see plenty more downsides. That is my review of AUD USD. I'll come back after that short review there of those two Forex pairs. Now, in relation to these trade setups, obviously we've done quite a few videos on them. A lot of people write to me have said, that looks extremely simple in terms of technical analysis, but it's actually worked. That's what you need to keep in mind if you're coming in the markets. Keep it just very simple. Do not clutter your chart up with trend lines through meaningless levels. And it's one of the big things that I really don't like is when I see online people doing like all this fancy, analysis with numerous lines, and they're meaningless. They only look like they're relevant because you're going back on the chart. They're not relevant going forward. You never see the fancy pattern traders give their entry, stop or targets, do you? Why? Because it doesn't work. You don't want to be working hard in terms of, drawing too many levels on a chart, okay? It needs to be kept very simple. Now, in terms of when you're trading any strategy, you must have confidence in the logic. The COT logic, using it in conjunction with your charts, just so easy to understand. Short prices can run against the commercials in the short term, but longer term, they are right about big trend changes. You just go look back on the data to when it started. This has always been so. Now, those two trade setups, worked really, really well for us, okay? If they didn't, it doesn't matter. you use good stop loss protection, okay? And you come out, and you're always going to get another trade with the COT. You will catch those big profits, like 300, 500, sometimes even 1,000 pips in profit on your trades. They're the trades you need, because you are going to have a lot of losers, obviously, okay? Now, in relation to trends on charts, when you look back, they look really easy to have got in on and held. That's in hindsight. If you're in a big trend, it's very, very difficult to hold it. I've never had a problem taking losses, holding open profits. I do. Once it gets above 300 pips, I'm like everyone else. Your temptation is to bank. You don't know what's going to happen next. You don't want the profit to get away. The best way around it is to do that 50-50 bank, okay? In terms of, USD CAD, I think it's going higher. However, I've got such a decent profit. I want to get some in the bank. It's psychological. I can always get back in. So, banking partial profits, it's much better, in my view, if you're very confident of the trend, than banking the full trade. Because let's say USD CAD doesn't retrace, it might break higher. Well, I'm still in. If it retraces, hopefully I'll get in my banked profit at a better price. Now, in terms of, there's an old saying about Forex trading. Forex trading is simple, we know that, but it isn't easy. It isn't easy at all, and most of that is that psychological pull within us to bank out of profits too soon. I think any trader can overcome, letting a loss run, but I think banking profits too early is a major problem for most traders, me included. So I know I've stressed the 50-50 bank in numerous videos, but it is the way that I manage that psychological problem, and I think it can help anyone manage that pull of wanting to bank profit. So I think I've covered everything I was going to cover in this video. Thank you very much for watching me. As usual, take care. Have a good day.